Hello, welcome to FountainFX on the 10th of February 2014. This is Monday. We're looking at the Euro-US dollar as usual, and as we can see, the currency pair has actually been in a downtrend since around about the 30th of December, and price has fallen from a high of 138, came back up to an area of the 137 with some quite strong momentum, had some sideways movement, fell, has pushed down to a lower low back here on at the end of last month to the 135, and since then it's been struggling to get back up. But we've put a trend line across these highs, and we can see that price has now broken that trend line, so it's confirmation of pushing into a long. Now let's just, before we accept that and we go great, let's buy, let's take a look at what's actually happening. If we look below at this area, I'm just going to highlight it down here, we can see that the MACD has crossed the zero line. The moving averages of the MACD have actually crossed over, but we've got momentum upwards, that big green bar that's coming up. So that's confirmation that we've got upward momentum. We haven't broken this upward trend line either. So it's showing that there's an upward push thrust. Let's just double check some news before we continue with this. And when we switch over to the news, we can see that there's a lot of news on the euro and the dollar. Understandably, they are the two largest currencies in the world. Down here it's talking about a euro crisis. So, well, dollar post weekly loss against the euro and the Aussie. There's still cause for worry about the ECB, that's the European Central Bank, bond buying programs legality. It's interesting. Dollar falls broadly after job data miss. So dollar drops to intraday low versus yen after jobs. So basically on Friday the non-farm payroll data came out, and if we quickly flick over to that and have a look. So on February the 7th, on Friday, as we see down here, the US dollar non-farm employment change, it was expected to be 185,000 new jobs in America, and there was only 113,000. And it very helpfully highlighted that in red to say there's a big gap between 185 and 113. So 72,000 fewer jobs were created than were expected, which was seen as a very big negative on the US dollar. So let's go back to the actual charts and see exactly what that shows us. So coming back to the chart, the daily chart, if we take a look, we're going to go into the hourly time frame just so that we can see how price changed on Friday when the news came out. If we look in the middle of the chart, we can see this is the morning session on Friday. So this is the European Open at the top, and the Europeans opened and pushed the price down by a massive 20-25 points. So nothing huge, there wasn't really a lot of trading happening. And then there was a period of indecision. This is order flow, consolidation, price just sits there. So you could have placed a resistance area above, support level below, and looked to have bought on the breakout or sold on the breakout, depending on the direction of the market. Now the key thing is that, as we can see, price is pushing up. It's an upward trend at the moment on the hourly chart. So when you're day trading, you're going to look to go in the direction of the trend and not go against it, and you need to be looking at the bigger time frames to understand what the bigger time frame trend is. And in terms of the daily chart and in terms of the hourly chart, price is pushing up, so that's the direction in which we want to go in. However, indecision here, because you never know, it could have been positive data. As it was negative data that came out, and we had an instant reaction to the data here. So data came out at 3:30. This is the 3 to 4 o'clock candlestick, and price pushed up. It then continued to push up in a step fashion, as price normally does, and it went from the 135.65 area all the way up to the 136.40. So roughly 80-point move off that bad news for the for the dollar against the euro. You can guarantee that this will have had a similar reaction across every US dollar pair. So that's the result of the information on Friday. What's actually happened today, if we have a look, is that it's now forming an area of resistance at the 136.40. If we go back to bigger time frame, go and have a look on the daily. Is that possible? Well, yes, because if we look at this large candle here, the actual area of resistance at the top of it is around about the 136.60. So we're coming into an area of potential resistance where price fell rapidly from it. Despite all this other sort of area of indecision prior to that, that's when the sellers took over from the buyers. So there's an expectation that we're going to start coming into an area where there's a lot of sellers who are wanting to push the price back down. So if the buyers are to overcome the sellers, there needs to be some more buyers coming in to push the price further up. Otherwise, price is just going to, this imbalance is going to take over and price is going to fall again. So that's really it from FountainFX. Go in, take a look at a smaller time frame, see what's happening around here, the 136.60 and the 136.40. It could be a potential continuation of the uptrend at the moment. It's got 20 points to move until it's likely to hit that clear area of resistance. But we can go into a smaller time frame and take a look at what's happening. While you're learning and you're novices, by all means do that. Demo trade it, but I wouldn't place your money on it until you've got a good feel for how day trading works. In the meantime, you can still look at smaller time frames just to understand how to improve on your entries. So rather than having a 50 or 100 point stop gap, you can be looking at 20 or 30 points instead. And that's it from FountainFX. Happy trading.